Welcome to The Business. I'm Alicia Barry. Coming up on the program, the Treasurer's budget promise to drive unemployment below 5%. So how low can we go before the economy starts pumping again?
It's never going to be quite as simple as, hitting a specific level and all of a sudden inflation takes off.
And branches closing. The pandemic accelerates the shift to online banking, leaving country towns out in the cold.
The local shops miss out and the town just goes backwards.
In a bid to kick the economy into a higher gear, the government's embarking on a big departure from its recent policy stance.
The best way to repair the budget is to repair the economy. But it won't be by undertaking any sharp pivots towards austerity.
On the contrary, Treasurer Josh Frydenberg taking up the RBA's call for more government spending in a bid to drive unemployment right down. But how low is low? The unemployment rate is currently sitting at 5.6%. Before the GFC, it was consistently under 4.5%. Treasury forecasts say the jobless rate needs to have a 4 in front of it. The RBA even suggesting it should start with a 3 to see wages rising again. Zach Gross from Monash University says the 6% jobless target flagged in last budget was not ambitious enough.
I think Josh Frydenberg has recognised that today, and that's why he's upped his target from that 6% cutoff to something a bit more ambitious and looking at pushing the unemployment rate below 5% to where we would hopefully be back to full employment.
So do you think this is a smart move by Josh Frydenberg or a political one?
Look, I think it could be a bit of both. I think at the end of the day, any treasurer's first goal in mind when crafting a budget should be to make sure that as many Australians as possible are able to find employment and get a job. And if Josh Frydenberg follows through with this pledge and promises to keep spending and keep supporting the economy until we reach full employment, then hopefully it should be a goal that does achieve that aim.
And for years, well before the pandemic, the RBA had been calling on government to do more heavy lifting, to spend on infrastructure to boost the economy. It's taken a pandemic for it to get its wish.
The pandemic has certainly woken up the Australian policymakers, and both the Reserve Bank of Australia and the Treasury up in Canberra are definitely stimulating the economy to a much higher degree now, as they should be. But it's true to say that the economy wasn't in its best shape in 2019, heading in to the pandemic before it really hit the economy hard.
Now, when it comes to reaching an unemployment rate of, say, 4%, is it a simple mechanism that you hit that level and boom, there's inflation?
Look, it's never going to be quite as simple as, hitting a specific level and all of a sudden inflation takes off. What we know is that an unemployment rate of 5% is just too high. Ultimately, though, because we haven't had much experience with unemployment rate below 5%, we don't know how low the unemployment rate can go. We don't know how fast the Australian economy can push itself. So the only way we're going to find out the answer to that question is by stimulating the economy, both with monetary policy and fiscal policy, and pushing the economy to grow at a faster rate, pushing that unemployment rate lower, down to 4.5%, 4%, maybe even below that, as the US economy was before the pandemic hit. And it's when we see that inflation expectations and wages start to rise, that's when we'll know that we've reached the level of full employment and reached somewhere that we can sustainably achieve higher levels of employment across the country on an ongoing basis. But we're not going to know for sure until we get there.
You pointed to there being no magic number when it comes to unemployment. If you go back to just before the global financial crisis, for example, the unemployment rate was sitting at a flat 4, but we had rampant inflation, a mining boom with very limited spare capacity in the economy. What's changed in our economy since then? Has it been technology, migration? How has it evolved?
You're right. The period before the global financial crisis was a textbook case of pushing unemployment too low. We got unemployment down to 4%, and then in 2007, 2008, we saw inflation getting up as high as 4%, almost 5% at its peak. And so it does seem that something in the economy has changed, because economists' best guesses of where we can push the unemployment rate seem to be around 4.5%. Maybe 4% is still going to be the lower bound of the economy. And if we have a more efficient labour market due to these increases in technology, that might be enabling us to generate lower levels of unemployment. So we're not sure how low we can go. We have gone too low in the past, but we know for certain that the current point of 5.5% unemployment is too high.
Zach Gross, we appreciate your time. Thank you.
No worries. Thanks for having me.
To markets, where investors welcomed comments from the US Fed that it will be some time before support is tapered. The All Ords gained over 1/3%. And with panic buying over, supermarket sales growth is falling. Woolworths shares plunged to a 2-month low after third quarter sales dropped 2%. Rival Coles reported yesterday that sales were down more than 6%, but shares shot up 3% today, with analysts viewing Coles as the front runner between the two. And the Australian dollar is buying close to 78 US cents. Hundreds of bank branches are shutting across Australia as the shift to online banking accelerates during the pandemic. The closures once signalled a town in decline, but now the industry says it's just a sign of the times. But in some regional towns, locals say their loyalty is being tested, as Stephanie Chalmers reports.
Heading southwest along the highway from Bathurst in New South Wales, you hit the town of Blaney. It's got a pharmacy, a post office, pubs and restaurants, and until recently, 2 major banks.
How often would you use the bank branch here?
Probably at least 3 times a week, and that includes paying bills.
National Australia Bank has already closed. The Commonwealth Bank will shut in June.
We can get a limited amount of change from the post office, but then other than that, I guess they'll have to go to Bathurst or Orange, which is like half an hour drive either way.
Tammy Mobbs works at a bakery on the main street of Blaney. Her older customers are hesitant about their ability to do all their banking online.
Some people still don't have internet to their house. We haven't had the FPOS facility for very long, but since we've had it, people struggle even with the tap.
30 kilometres on the other side of Orange is Molong, and the last bank branch here is slated to close in June. It's a decision that won't only affect this town, but residents across the Shire.
The online petition now has 1,166 signatures. So, you know, we've just got to fight hard.
They've tried it in other branches and it hasn't worked.
Mayor Kevin Beattie has taken that fight to the top of the Commonwealth Bank, holding talks with its boss, Matt Common.
Instead of just a straight closure, is there an alternative? Can we have the branch open for a couple of days a week, 3 days a week? Share that with Blaney.
The Commonwealth Bank has told the ABC there's been a 45% drop in transactions at its Molong branch over the past 5 years.
They're saying that they're taking into consideration COVID, but I also raised the point that prior to COVID, we've just gone through 3 years of drought. We weren't directly affected by the fires here themselves, but we were affected by smoke. A lot of our wineries lost their crops last year through smoke taint.
Farmers in a drought, they do not spend money. They don't come into the bank. Just simply, they're there day in, day out, feeding livestock.
Now the drought has broken and COVID restrictions have eased, Molong's enjoying a surge in tourists.
Since people haven't been able to travel overseas, they're coming through the west here and they're staying. Definitely a lot busier now. So not having the banks is going to be a big hassle for me.
The head of the bank lobby says branch closures no longer signal a town in decline as they once did.
What we're seeing now is more than half the branches that are closing are in the middle of capital cities or major regional centres where there's population growth. So this isn't about population decline, it's about a really big shift in how customers are accessing their banking services.
Unions argue the shift has been accelerated by branch staff redirecting customers to digital services.
That actually has had targets imposed on them in reducing the number of over-the-counter transactions and migrating or transferring their customers to digital platforms. So if they didn't do that, then their job was on the line.
The finance sector union says more than 300 branch closures have been announced since January last year, costing about 1,300 jobs.
Wherever they can, banks are redeploying staff into call centre functions. And technology has meant that doesn't mean you have to drive 100 kilometres from your town to the nearest call centre to keep your job. Now it's possible for people to do call centre work from their own home.
With services now at the touch of a button, there's more opportunities for challenger banks to take customers from the established players.
It's easier for the customers now to think about, I don't have to be that lawyer anyway. I've got a better options or more options in front of me.
Back in Blaney, residents are worried loyalty to local businesses will also fade if people travel to Orange for face-to-face services.
You go in there for one thing, you might as well spend half a day in there and do what you got to do.
The local shops miss out and the town just goes backwards.
As banking moves forward into the future.
AMP bosses are preparing to face angry shareholders at tomorrow's annual general meeting. The financial giant has been plagued by scandals with a revolving door of executives since the Banking Royal Commission. AMP's latest chair is trying to spin off its most profitable division with the share price at a record low. Daniel Ziffer reports.
AMP shareholders are stuck in a nightmare.
Well, there are so many problems.
AMP does not have an identity at the moment.
Over the past 5 years, the value of AMP shares have fallen from nearly $6 to just over $1. The latest CEO is walking out the door, and there's big questions about the company's future.
Absolutely chaotic. We've seen changes in chair, changes in CEO, we've seen various directors departing and issues all over the paper every day.
Once a pillar of Australian business, the wealth manager is now facing tough competition from larger and leaner operators.
Revenue is problematic at a time when costs need to be reducing, and unfortunately they're not reducing fast enough.
Its new chair, the third in 3 years, essentially offered the entire company, or its parts, for sale. The only suitor, US-based Ari's management, dropped the idea. Now, AMP will spin off its most profitable division, AMP Capital.
All I can see at the moment is profit continuing to decline in Australian wealth management because of the shrinking distribution and the brand damage.
Brand damage is an understatement. At the Banking Royal Commission, AMP revealed it lied to regulators and charged deceased clients.
Charging premiums for life insurance to someone who's dead. That's the position, isn't it?
Yes, that's the way the system is treating it today.
The chair, CEO and half the board left, but it didn't stop the scandals. The new board approved the elevation of Bo Pahari to run the company's star division, AMP Capital, despite having docked his bonus over a sexual harassment complaint. Mr Pahari was demoted after the scandal broke and will now leave as AMP Capital is spun off. Reports suggest he could get a $50 million payout.
I think it would be fair to say that they've been engaged in an almost full-time crisis management since the time of the Royal Commission, if not earlier.
David Hazeldine was an AMP financial planner for more than a decade. He's part of a class action of company representatives who claim they were axed and paid a fraction of what their businesses were worth.
AMP are stealing their business and their livelihoods and throwing their reputations in the gutter in the process.
AMP is still making money, $300 million profit last year, but the problems are everywhere. Can new CEO Alexis George, currently second in charge at ANZ, reverse the fortunes of one of Australia's most scandal-prone companies? Plenty of questions for the annual general meeting.
And that's all from the business. For more on those stories, go to our website and click on the business page, and you can catch up with the program at any time on iView. I'm Alicia Barry. Thanks for watching.